Welcome back, everyone. We're taking that stack of sources you have and distilling it down to what's really potent.
Exactly, getting straight to the important stuff.
And our focus today is cutting through some of that financial noise, giving you a clear picture of something maybe on your radar.
Which is?
The upcoming earnings report for ATAI Life Sciences.
ATAI.
Right.
Yeah, and this isn't just about, parsing raw numbers. It's about understanding the unique context, the specific expectations.
Especially for a clinical stage biotech, which is key here.
Right, and what factors might actually move the needle.
Yeah.
We've looked through the pre-earnings analysis, and, well, we're ready to unpack it.
Absolutely. And for you listening, if you want to quickly grasp what's important here, we'll walk you through it.
Analyst views, market sentiment, the key details.
The whole picture. We want to help you connect those dots on what to watch for. Basically, providing that foundational understanding, pulling out what really matters from all these financial insights. Okay, let's dive into the specifics then. Our sources suggest ATAI's next earnings report is estimated for Tuesday, August 12th, 2025, before the market opens.
But, and this is important.
Yeah, really important to flag this. The company hasn't officially confirmed that date.
Right. It's inferred, across multiple earnings calendars, but it's not set in stone by ATI themselves.
So that's an initial piece of uncertainty right out of the gate.
Definitely. Now, what's fascinating here is the analyst consensus. Let's look back first. Q1 2025, revenue was around $1.56 million.
Which, for a company at this stage, isn't necessarily about the size of the number, is it?
Not really. It shows some activity beyond pure R&D, maybe early licensing or grant money. It's a start.
Okay. And for the current quarter, Q2 2025.
Well, there isn't actually a widely published revenue consensus out there from the big trackers.
Okay.
But the EPS consensus earnings per share, that's in the tighter range. It's sitting around -$0.12 to -$0.13 per share.
And that's from sources like Zacks, MarketBeat.
Correct. And remember, a negative EPS is totally normal for a company pouring money into research like this.
Right. It's all about how that loss compares to what people were expecting.
Exactly. The magnitude versus expectations.
Now, here's something that really stands out, especially for folks who follow these reports closely.
That's that.
There's no reliable whisper number published by the major trackers this quarter.
The whisper number, that unofficial street expectation.
Yeah. And its absence, plus the fact the company didn't give formal quantitative guidance for Q2, it adds another layer of uncertainty, doesn't it? Makes this report feel a bit more like a blank slate. Could surprise more.
It really could. And that makes looking at the last quarter even more relevant.
Yeah.
Q1 2025, remember?
They beat expectations, right?
They did. EPS came in at -$8.15, but the consensus was worse, at -$0.19.
So a positive surprise of 4 cents. According to Zacks, that's like, what, 21%?
About 21%, yeah. And for a clinical stage biotech, beating a negative EPS guess like that, it can signal better cost control, maybe more efficient progress than expected.
It suggests maybe a pattern of managing expectations, or at least costs, pretty well. Sets a tone.
It does. It's a key detail to remember heading into this next report.
So, thinking about historical performance, what does this lack of formal guidance and whisper numbers mean? The sources say detailed beat-miss data for all 4 prior quarters isn't fully listed publicly.
Right. And the same goes for specific post-earnings price reactions. The intraday moves, the follow-through.
That data just isn't readily available for the last 4 quarters either.
It paints a picture of pretty limited historical public data if you want to do a deep statistical dive on past reactions.
So without that rich history to lean on, how does that change things? Does it make the current analyst sentiment or those future projections even more critical now?
That's a great point. It really does elevate the importance of other signals. Without that detailed history, the question becomes, what can we track effectively? Well, the key trend, maybe a more stable view, is the trailing EPS. That stands at -$0.91.
Still negative, obviously.
Of course. But what's really important, especially for a company like ATAI focused on growth, is the future trajectory.
And what are the models showing there?
Street models are actually projecting that the full-year losses will narrow next year, quite significantly, from -$0.77 down to -$0.61.
Okay, so even though they're losing money now, the expectation is for improvement.
Exactly. It implies an improving operating trajectory. That expected narrowing of the loss is a really significant point for anyone assessing the company's financial health.
Suggests a path towards efficiency, maybe eventual profitability as the pipeline moves along.
That's the idea. It tells us analysts are looking beyond just the current cash burn rate.
All right, we've got the history, the expectations,
Yeah.
but what about right now? What's been happening during this quarter leading up to the report?
Yeah, good question. There's been some significant news flow.
Like what?
Well, we saw reiterated buy ratings and, importantly, increased price targets from analysts.
Oh, okay. Examples.
Yeah, H.C. Wainwright, for instance, lifted its price target to $15. That was July 31st.
$15. And wasn't there another one?
Maxim. They reiterated their buy rating,
Yeah.
kept the target at $10. I think that was August 4th.
Those buy ratings sound good, obviously. But, for a clinical stage company, aren't analysts sometimes a bit optimistic? Especially when the big wins could still be years off.
That's a fair critique, and yes, optimism can be a factor.
So what's the potential downside if things don't go exactly as hoped, if those regulatory milestones hit a snag?
Well, while you're right to question it, these target increases still indicate a genuinely constructive sentiment heading into earnings. And you have to consider the sector context.
Right. Clinical stage, mental health, biotech.
Exactly. So sentiment there, access to capital for neuro and psychedelic developers. It's sensitive stuff. Sensitive to interest rates, sensitive to regulatory news. So these analyst target hikes in late July, early August, they suggest the analysts aren't just being hopeful. They're likely factoring in supportive sector trends or maybe specific positive program updates that boost their confidence.
So it's not just internal company progress, it's the bigger picture too. Potential tailwinds?
Precisely. Regulatory or funding tailwinds could help de-risk their path forward. That's likely part of the calculation.
Okay, let's shift to the price chart then, the pre-earnings action. Sources showed ATAI trading around, what, $3.96 at the close recently?
Yeah, $3.96 to $4 p.m. close. It was actually down a bit that day, just over 4%.
A little softness right before earnings. Did it bounce back after hours?
Slightly. Back up to $3.97 in extended trading. So, yeah, some recent weakness there.
So connecting that price action, what levels should we be watching?
Well, based on that close and the intraday weakness, immediate support looks to be right near that $4 mark.
Okay, $4 is a floor, potentially. Resistance.
Probably just above that $4 handle. But what's really notable here, or rather what's missing, is any options implied move or a reliable estimated percentage swing from our sources.
So the options market isn't giving us a clear signal on how much volatility to expect.
Exactly. That implied move, it's basically the market's bet on the size of the post-earnings jump or drop. Without it, we lack that clear market expectation.
Makes it more speculative, trying to guess the immediate reaction.
Very much so. High uncertainty on the potential magnitude of the move.
Okay, so let's map out the possibilities. What's the bullish case look like? If you had to paint the absolute best case scenario for ATI's earnings, what would that involve?
Well, certainly you'd want to see an EPS beat against that -12, -13 cent consensus.
Right, beat the estimate.
But, as we've been saying, for a company like ATAI, revenue isn't the main event right now.
Got it. So what is more critical?
Updates that genuinely de-risk their pipeline. That's huge.
Meaning?
Things like positive clinical progress.
Yeah.
Maybe hitting key endpoints in a trial, moving a drug into the next phase, that kind of news.
Okay, pipeline progress. What else?
Clarity on partnerships, maybe new financing, and crucially, showing credible discipline on operating expenses.
Controlling the spending.
Yes, that supports the street's view of those losses narrowing next year. And it reinforces their ability to actually fund future development.
That brings up the cash runway question, doesn't it? How long can they keep going?
Absolutely critical. The cash runway, how long they can operate with current cash and burn rate. If they can reinforce that runway, maybe through new funding or just being super efficient, and combine that with hitting those pipeline milestones, that could spark a really strong kind of beat and raise style reaction, even without much revenue upside.
So it's about future potential and managing resources carefully.
Precisely, not current sales figures.
Okay, now the flip side. What does the bearish case look like? What could trigger a negative reaction?
Definitely a wider than expected loss would hurt. Or a higher cash burn rate R&D spending, SG&A costs, without any good news to offset it.
Makes sense. What about commentary?
Cautious comments on trial timelines or any regulatory hurdles that could really pressure the shares, especially after those recent analyst target hikes set expectations higher.
So delays or setbacks are bad news.
Very bad news. Any signal of accelerated cash use without clear progress or unexpected delays in getting results from key trials, that could trigger a sharp sell-off. It hits the core of their value proposition.
So the key takeaway metric isn't headline revenue.
Not really, no. It's that cash runway and the operating expense trend. Are they on track for that modeled loss improvement next year, that minus 77 cents improving to minus 61?
That, plus the timing and success of the pipeline milestones.
That's what will be central to how the market reacts. Those are the real indicators for a company at this stage.
Okay, bringing it all together then. What does this mean for you, the listener, trying to quickly grasp what's important here? Our sources seem to lean towards a neutral overall outlet for ATAI before this report.
Yeah, with a confidence score of 4 out of 10. So not exactly a strong conviction either way.
And why so neutral?
Well, it stems from several things we've discussed. The unconfirmed report date, for one.
Right. The lack of whisper data.
Exactly. And no reliable options implied move from the trackers we looked at. Plus, just the nature of it being a clinical stage company.
Where trial outcomes and guidance on cash are everything.
They really dominate the discussion. It keeps the event risk quite high, which raises that crucial question for investors. How do you approach something with this much event risk and not much clear historical data to go on?
So what are some potential approaches or strategies based on the sources?
Well, for the more risk-averse listener, it might just be smartest to wait.
Wait for the report and the company's comments before doing anything.
Pretty much, before jumping in or adding to a position. Given the uncertainty about the price move and the limited history, sometimes patience is the best approach. See how the market digests the news first.
Makes sense. What about those with a higher risk tolerance?
For them, event-driven option strategies could be considered. Something like a small debit strangle or straddle.
Can you quickly explain those?
Sure. A strangle buys an out-of-the-money call and put betting on a big move, up or down. A straddle buys an at-the-money call and put also betting on a big move, requiring a slightly smaller move to profit initially, but costing more.
So ways to play potential volatility?
Right. If the options are liquid enough and the implied volatility isn't already sky high.
Yeah.
But the sources really caution against this, especially given there's no published implied move to gauge expectations.
So high risk there.
Extremely high risk, needs discipline. And for current shareholders,
What should they consider?
maybe defining their risk, using stop losses around that recent support near $4, perhaps considering partial hedges going into the event. It could be prudent given the recent volatility and, frankly, the inherent unpredictability here.
Managing that event risk is key.
That's the name of the game.
Okay, and that wraps up our analysis of ATAI Life Sciences' upcoming earnings report. We've walked through the estimates, the analyst views, the specific context for a clinical stage firm, and those potential scenarios, hopefully giving you a clear picture of what to keep an eye on.
And just remember, for a company at this stage, the story is often less about today's revenue and much more about that scientific progress, the cash runway, and hitting those crucial pipeline milestones.
Yeah, those are the real indicators of whether they're moving forward effectively.
Absolutely.
So for you, the listener, here's something to think about. How does understanding a company's specific stage, like being a clinical stage biotech, still burning through cash, fundamentally change how you interpret its financial reports compared to, say, a mature, profitable business? It's a completely different kind of puzzle, isn't it?